Hello everyone. Hello. Good day. You're welcome to this channel, the Master's Crowns YouTube channel, and I'm back with another strategy, another video that can help you boost your performance in trading. And by the way, a lot of people have been contacting me as relating the past strategies I've posted that it's profitable to them, and that's the motive, that's the purpose behind uploading videos on YouTube so that people can be enlightened, so that people can have what they need to trade the market. So I'm here with another strategy. I help you trade synthetic indices on deriv platform. And I want to say something before giving the setups. And what I want to say is this: whatever strategy you are using, whether you are using strategy to trade the market or you are not using strategy to trade the market, whatever you are doing on this, know that this involves your money. This involves your money. So you need to have high mastery. You need to have high level of mastery. You need to master the market. A lot of people are rushing into trading, saying they want to test their performance. No. So you want to test your performance with your money. That means you have a lot of money to spare. And that's funny, because you are actually on the market to make money. They're actually here in the market to make money. So why dash the money to the brokers? Why give them your money? You need to have high level of mastery. You need to master the market. Master everything that is happening. Stay for hours on your charts, even if you're not trading. Stay for hours. Just be observing the beauty of the trade, the beauty of how the market works. Master it. Spend hours. You don't start trading and small profit will make you be posting it on social media, and before you understand, you have lost all your money. Be a master at this trading, and it will surely pay you. Be a master at it. Master everything. If you can have a book, write down market structure, master market sizing, master market sentiment. Whether if you are trading currency pairs, these are what you need. If you are trading even synthetic indices, you need to understand the zones. You need to understand FTR zone. You need to understand supply and demand. You need to understand price action. You need to understand things. You don't just go like that. That's why I usually teach my people. You need to understand. Be hungry, because you'll be trading this thing for years, perhaps for your lifetime. Then why using just surface knowledge? Why depending on surface knowledge? No, it doesn't work like that. Have a level of mastery. You need to be hungry for more. You need to be forever a student of the market. You need to be forever a student of the market. Learn from the market. Stay in the market. Observe. Learn. Edit. The thing is lure. 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 You need to learn. You need to unlearn. You need to relearn. and you need to earn. You need to learn, you need to unlearn, you need to relearn, you need to earn. You need this lure, L-U-R-E, to help you. Some people just want to earn. Some people don't want to even learn. Some people don't want to learn. Then we'll be talking of unlearning and relearning. Some people don't want to learn from the market. They just want to just get a strategy and start using. Yes, the strategy I've been given are working fine, but what do you need in addition? You need knowledge. You need knowledge. I don't just want to upload things and you just make money like that and you cannot be a professional. You need knowledge. You need knowledge. Go for trainings. Go for seminars. Go to places that it will blow your mind. Go to places that it will build you in this financial journey. Go to places and learn from the market. Meet people, learn from them. There are some people that are trading this market for over 25 years. Some people have been here for over 10 years. Some people have been here for over 15 years. Some people have been here for 5 years. Some people are 3 years. Some people are here before you. Meet them and learn. You are just here for just 8 months and you are feeling that you've attained. No. Yes, you are getting profits, but you need more. You need understanding of the market. You need understanding of the market. So this is what I can tell you for now. Let's go straight away to the strategy. So let's go to the setups. We'll be starting with Ichimoku's. The Ichimoku's. So we'll go to our F function as usual. Then Ichimoku Kinko Hayu. Click it. Then our Tenkan San is 9. Then 26 like this, 52 like this. Then fill. Click the fill. Then Tenkan San 4, 1. The rest should be 1, 1, 1, 1, 1. And for Tenkan San 4 pixel, the color should be blue. Then the others, the color should be white. If your background is white, but if your background is black, then the color should be black. Then click done. Then the next, we'll go to accumulation and distribution, volumes, under volumes. Then just like this, volumes tick, it should be tick, not real. Then style 4 pixel. Then this color, then done. That's our default. Then you go back again then indicator window 1, the F function plus. Then you go back to your Ichimoku's. Then these same settings, then you click done. These same settings, let me go back to it for you to see. These same settings, then done. Then you go to your indicator window 1 function plus. Then relative strength index, your RSI, go to it. Then the period, change the period to period 7. Apply to close. Style 2 pixel. Color, put it color white. Then the levels, delete the levels. Then add, using this positive sign above, just 2 of it. Put 80, put 20, then 1 pixel, color blue as usual, then click done. That's it. Done. Then you go to your F function, indicator window 1, go to awesome oscillator, then line width 3 pixel, value up green, value down red, then same at default like this. Done. This is it. Done. Then from there, go to your F function, indicator window 1, F function plus, then you look for average directional movement index. That's the first indicator on the train. Click average directional movement index, then change the period to 14, the style 1 pixel white plus di 4 pixel, then change the color to red, then done. Change the color to red, then done. Go back, then indicator window 1, average directional movement index, then 15, from 14 to 15, then just is only the D is the positive di that we will be changing as we increase the period. So we change the period to black, then done. Change the period to black, then done. Okay. Change the period to black, then done. Okay, I'm coming. Can we click the bin on top, delete the average directional movement index, the first two, leave the awesome oscillator, delete the relative strength index, yes, then go to your main chart. So it should be like this. Sorry for the error. Go to your main chart, F function plus, then relative strength index, then the same settings on relative strength index, then you put it through, then you go there. So it should be indicator window 2, this one. Click the F function plus, sorry for that mistake, then average directional movement index. So you start from 14, the color should be red, done. Then 15, color should be black, done. Then go to your F function, 16, use dark brown. Then your next, go to 17. As usual, I've said we will only be changing the positive di, so only the color there. So go back to blue, 17. That's then 18. 18, this color, and go to 19. 19 green, 20, 20. Look out for this color. Then 21, which is the last. Check out for purple. That's it. That's it. So you go back here. Then here, period 5. Add or delete all, then add 4. At 90, 80, 20, 10, 4 pixel, period 5, then done. And you go back to indicator window 1. You put the RSI for indicator window 1, 7, and you delete 90 and 10, and 2 pixel, then done. Yes, that's it. So it's just like the first. This one, this relative strength is not even needed, because this is the one that we'll be using, the 90, 80, 20 and 10. So you can leave it there or delete that one. So this is it. This is it. So we'll be using the H1. We'll be using the H1. Using the H1. Let me be fast. H1. Using the H1. And I sometimes use H4 for this. So you can use it to trade these assets, the VIX, and go to your H1. So let's start with let me pick volatility 75. Let's go back and see H1. Let me give you the terms for entry. So this is it. This is the term number 1. Your Ichimokus must be flat below, for that's for a buy. It must be flat below the 20 level, and your ADX should be also relatively flat around the 20 level area, so that once you've taken a buy, let's say this buy, you took the buy here. Okay, this is not where I gave the example. So you or let me give for the sell, so this is it. Your Ichimoku should be above, for a sell they should be above the 80 levels, and your ADX should be flat above the 80 level too. Then you enter for a sell. So you see it sells on. So you have to exit here, and as you can see it also gave a double bottom here, so you have to exit here. Why? Because the Ichimokus are below 20 here, and the ADX is here too, but most importantly the Ichimokus are below 20. That means, or at the 20 level, that means it has rallied down from the 80 level to the 20 level. So you have been here for just 1, 2, 3 hours. Then you take profit, and as I've said earlier, you just take your profit. Then as you can see, it's giving bottoms here. It gave a triple bottom, then it went up. So with your knowledge of market, or the market, you should have entered again for a buy. See, it's below 20 level, this is down also, so it goes up. Once the Ichimoku is above 80 level, you see, then you TP. Once the Ichimokus are above 80 level, then you TP. That's one example. Let me show another example on VIX 75. So you see the strategy works very well. You see your Ichimoku are above the 80 level, and this is already touching here. It has touched the 80 level, and it gave a resistance. It showed that it's going down. And this you need to understand this red zigzag accumulation and distribution. It is the indicator that will be showing you the direction. It it is a fast indicator, not unlike the others that are slow. It's a fast indicator that gives you where the market is going. So wherever it points, that's where the market will be going. So you see, this short buy is because the accumulation and distribution was pointed up between here and here. It pointed up for a buy, then you see it points down again to continue. So you should have entered for a sell here, and as you can see, you're going down. That's the strategy. You're going down. So you TP here. Why? You see it's even ranging, consolidating here, but you TP here. You see the Ichimokus are below the 20 level. So that's the power of the strategy. For how many hours? More than 24 hours you're in the market. More than 24 hours. You're just going down, just selling. You see? And another thing is that the awesome oscillator has touched the wall here. So it gave a sign for a strong buy. The moment it touched the wall, it's a sign for a strong buy. So you see, it goes down for more than 24 hours. You see. So you stay out of the market and wait for the next setup. Stay out of the market, observing the market, wait for the next setup. Let me show you another one. VIX 25. As you can see here, the Ichimokus are getting flat and below the 20 level. Your ADX is down here. As you can see, this is the rejection that gave a sign of it's going up, and the Ichimokus are below 20 level. So what you have to enter for a buy here. So you see, only a short pullback, just a small pullback, then you start buying. So I tell you, you have to exit when your Ichimokus are above the 80 level. So this is where you exit, and it will also give you a sign. You see, always once the Ichimokus are above the 80 level for a buy or below the 20 level for a sell, you will notice a kind of consolidation ranging like that. Then you TP. So you see, you have been in the market for over 10 hours. In the market, fishing your profits, getting your profits, and that's all for you. Get your money and you do whatever you want to do with it. That's it. Then you can check any of them. Let's check VIX 100, volatility 100 too. So that's how you trade the market. So you see, it has been consolidating here. and the Ichimokus are above the 80 level. So you wait, because why? This is the reason. Your ADX is in between. Your ADX is in between the 20 and 80 level. Your ADX is in between the 20 and 80 level. And another thing is that why you have to wait, and why you have to wait is because this awesome oscillator has touched the wall down here. So that means the buyers are in control. Once the awesome oscillator is touching the wall below here, that means the buyers are a kind of more than the sellers. So you have to wait. That's why it bought small. Then you see immediately the awesome oscillator left the wall. Immediately it left the wall. We notice another thing, that the ADX got to this point, to our overbought level. It has gotten here, so it's a sign for a sell. So you sell now. So you enter for the sell. So you see it goes down for over 24 hours. You see it's still going down. This is life. So you see it goes down. It goes down for you for over 24 hours. You have been selling. So it's almost turning now. Why? Because the Ichimokus is getting to the oversold region. It's getting down here, so it will come down here and it will be flat constantly, and that means it will be ranging for some time. Then the market will either consider to go up again or continue selling. That's it. So you check. Let me give you one more example. Volatility 51s. So that's the power of the strategy. So do well to subscribe to the channel. Do well to subscribe to the YouTube channel. Subscribe for more videos. Subscribe. That's it. Let me show you and get an example here. So once it's ranging like this and the Ichimoku is below the 20 level and the ADS is below here, you have to observe the market, wait to see where it will break out to. So as I've said, your accumulation and distribution, this red zigzag, will give you the direction of where the market is going. But I said that you have to wait if your awesome oscillator is touching the wall. So you see your awesome oscillator is touching the wall above. That means it is against the buy. So once the awesome oscillator has left the wall, it means the buyers are in charge. So you go. So you've noticed it has left the wall. And your Ichimokus are below and flat below the 20 level. So what are you going to do? Don't wait for anybody. Enter for the buy. So you see you enter. You see buying for this. So you see you buy for this. So the Ichimokus are here, are above the 80 level. Then you TP. Then you take your profit here. So you see, you would have been here for over a day here. Get your profit and watch the market. Wait for another entry. Let's check another example, then we close for the day. You see, this is a great example. You see, the Ichimokus are below the 20 level, and your ADX is below and it's almost flat too. So what are you going to do? Are you going to enter here? No. Don't rush. Don't rush. The essence is not about entering early, because it can go against you. So you have to wait for confirmation. So you have to wait until the awesome oscillator detach from the wall here for a buy, because once it's on there, is stuck to the wall, it's a sign that the sellers are in control. But as I've said, your accumulation and distribution will give you the direction. So you see, it's pointing up. So the sentiment is telling you that the buyers are a kind of more in this ranging market. So you have to wait. So you see, it has left the awesome oscillator, has left the wall, and your Ichimokus are below the 20 level, and this one, the ADX here is pointing up. So you enter for a buy. You see, so you see, it went up, then came. So this is like, it almost retested, but it continues up. You see, so you have been here for days. So this is where you would have taken your profit. Why? The Ichimokus are above the 80 level. This is simple. This is a simple stuff. It's very simple. So you see, you have been here for days. So you will be somewhere gisting with people, and your phone is already trading, and that's how to make your money while you sleep. You see, so you just place the buy, then put your stops. Maybe put your stops below this level. Then, depending on the risk to reward ratio that you are using, then you enter. You see, it goes here. So you see, anytime it's here, you see the market will range. Then you wait, you stay out. Don't be. Some people are trading even in ranging market. Yes, it's good for them, but you just wait, because after they have lost their money, they will get another money to put it back in the market. But either you are using your last money, then wait, be patient. So you see another one here is below, and most times the Ichimoku should be flat. So you can enter here. Should be flat. You see, it goes up. It will surely go up. See, it's just going up. You wait till the Ichimoku are above the 80 level, then you TP. So this is for like, this trade is for like 7 days. You see, you are just in the market. then you get your profit. So you just enter once, then you get out of the screen and you'll be busy doing what matter most to you while you are making money. That's it. So you can demo trade, test run it, be patient, wait for the market, wait for the setups that I've set to align. Once they are set, then you can enter without fear. You can enter and get your money. Then you TP. That's it. So you see, you hardly lose. You hardly lose with this. No blowing of account. It's for people that are greedy and have a trading journal, have a pattern, have a plan. I don't trade every day. I can even trade once in a week. Then I do other things because I have other things to do. So even if you are a student, this is how to trade while you are still studying. So you get 1-2 trades in a week, 3 trades in a week that will fetch you high returns. Then you are focused with your book, with your studies. If you are a full-time worker, then you get a setup that will work for you. Then you continue working. So you see, even boom and crash, they follow that setup. These Ichimokus are flat here, but this ADX is not above here. So it's not actually, this is not a good entry. The Ichimokus are above here while the ADX is below here. So you have to just stay out of the market. But still it went down because of the power of the accumulation and distribution. It gave a sign that the sentiment is down and more people are down. So you can enter depending on your risk appetite. You can enter. So you see, once the Ichimokus gets down here, then it turns. You see, so this is a good setup. See, after the ranging and you wait, once the awesome oscillator has detached from the wall, then you enter for the buy. So you see, it goes up, goes up, goes up, goes up. So for boom and crash, you are not to stay in the market for long until you know what you are doing. Don't stay in the market for long. So let me show you one example, then we are done with the video and the strategy so that you can start practicing it. Let's look for a good setup. Let me show you a good setup. This is a good setup. The Ichimokus are below the 20 levels and your ADX just touches here and points up, and your accumulation distribution is pointing up. Your awesome oscillator is not attached to the wall. Then you enter for a buy. You see, it goes up, it goes up, it goes up, it goes up, it goes up. Then you exit here. This is a buy on crash. So some people that are fearing the spike, no spike here. There's no spike that will catch you here. So you exit when the Ichimokus above the 80 level, you exit. You see, then it's going down now. So you see, you have entered here and you've stayed in the market for over a day and gotten your profit. Then you exit. You can make high returns using this strategy. This is an amazing strategy. I've used it before and it's still working, and you can still use it to get profits with it. Mind you, these objects I'm using are just for illustration. They are not the entry and exit point. You should watch my video on how to enter and exit a trade. If you don't know how to enter, watch my video on it so that you wouldn't see a setup and you just go over and put it assuming that you've entered. No, this is just to show you how powerful this strategy works. So this is it. Subscribe to the channel, turn on the notification button, click the bell, like, comment, and share the video. Thank you very much. Bye bye. See you next time.